Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So today is Wednesday, and we did have a down day in the market after 3 days of rallying from the reversal we saw on Friday. It made some sense yesterday to lighten up, some of your positions, stick with some positions just in case we consolidate and digest well in order to continue higher. But, we tend to always throw out our little formula, and sometimes it's great, sometimes it's not, sometimes it limits your profit, sometimes it keeps you safe, where on a day one where you get a reversal, maybe you dip your toe in from the long side. Day two, follow through, you add, you go with the best of the best, and day three, you try and trim some and hold some. And then figure out what's next. Do we digest well? Do we hold higher? What are the sectors doing? What's the rest of the macro market telling us? What are the leaders telling us? And then you figure out whether or not after trimming some on day three, you could stay with some stuff, get back in, and continue for what could be, a decent action. So you take a quick look at the chart of the spiders, and you will see here that this has been the range that we've been trading in since March. You had this breakout failure that led to a sharp decline lower, and then they pushed the envelope a little bit back up in the shorts to the overthrow to the downside, and then you had this little 3-day pivot that wound up triggering to the upside, and then this was your small red dog reversal on Friday, right? Here we reversed, closed strong. Monday, you had your gap and go through, resistance, through a lot of levels. And then here on Tuesday was your small topping tail, So if you think about where you came from here at 186.83 all the way up to 190.42, makes sense, especially if you took the spiders, to at least take the spiders off, which is what I tried to do, because I went along the spiders on Friday, held through Monday, and I took them off on Tuesday saying, you know what, let me stick with some stocks just in case, but that's the move I wanted there. Anyway, with that being said, you go to today's action. Boom. Not the end of the world, but with the way the market's been, where you have a breakout failure like this, where you have these type of bars that come in there, you could make you a little trigger shy, or it could at least make you non-committal, because of the way things have been going. So all in all, you look at your small Fibonacci retracement from here to just say where we just came to, and let's take a look at it this way so you can see it. All we came into today was really, the 50% retracement of the move from where we took off from, or a little bit higher than that, because I didn't draw this perfectly. And I know I'm being a little extra dramatic here by showing you, these fibs, just so you could see a little bit closer of what really happened today when you just look at it in the chart. It less than the 50, but more than the 0.38. If you hold the 0.38 or you hold the 0.25, typically you don't wait around, you just continue to go. If you come in less than the 0.38, that means you might get more of a range, but it's still strong. And then here's your 0.50, which is 188.62. So so far still holding the gap and still holding the majority or a decent amount of this part of the 3-day move, let alone the move that's taken place from down here. If you want to judge it from this move, if you were in it from when you reverse down here, all of a sudden, all you've really pulled back is not even 0.25. So in perspective, you could still come into like this 188.18 and still have some commitment to this move that you've seen off of this reversal pattern. So all in all, the bears are going to growl about a crash. They're going to growl about everything, and they could say what they want. If you're tactical, kind of like the way we're trying to do it, you probably got rid of some stuff, and then who knows? Maybe tomorrow they push us below today's low, which is 188.79, get us in the gap, stop out a few leftover longs, and then we get some kind of reversal tail. So it would continue the trend of a low, higher low, higher low, higher low, and then maybe we get another one that at least we feel more comfortable re-entering, especially if you exited right there. Now, some of the reasons why people could have been jumpy today, besides the Dow being down 100 points, is because A, you had the Russell, which has been very weak, that didn't have a day 3, turn lower. So first you go to the spiders here just to see, look at this real quickly. You have the spiders, on day 3 above day 2's high. You go to the Russell, what did it have? Didn't even think of having that. It had your reversal here, off when it took back the the 200-day. You go to this, that was a spot to switch gears, and then you have your day 2. You didn't even have a day 3 in the Russell. Right there, that should have been a signal. At least don't be in the Russell long. And then today's weakness, it did what it's supposed to do. If you're relatively weak and you don't go up day 3 like every other sector, you probably go down first. And now, it's right on the 200-day again. And people are like, is a potential head and shoulders big macro pattern still here? It's a little loose, but it could be. That's why I think people are skittish still, because that's the way this year has been from the long side. So I'm sure people a little bit too from the short side, because every time it's tried to break below key support, it's been very tricky too. The only time you had a real clean move is when it broke below the 21-day here and beelined it down, but no one was even believing in it then. But anyway, this is still very weak. Another reason why people probably like, wow, maybe this is a breakout failure and it's a fake out and it's a head fake and it's a, the way it's been, is because you look at the TLTs. Bonds screamed. Look at that. Boom. Big gap up after pulling into the 21-day. What's going on here? What's going on here? Everyone that says that when the bond market goes super strong, everyone thinks some kind of travesty is going to happen, and that's because sometimes it does. So it makes sense, again, to pull back in the equities. Then you go to the TBTs, where the market, where rates are supposed to be showing a stronger economy, and then all of a sudden, boom, you're at the lows of 2014 after a snapback. Okay, you've had these little oversold snapbacks sold, snapback sold, snapback sold, and this trend has been very sharp, and it remains that way. Okay, and so when you get a move back down with a gap like that, creates some fear, and it should. Why be overexposed? And then even on the other flip side, you have gold, which recently has been, go up when the market goes down, coming out of a not a real tight, but actually it didn't really get out of this yet. Let's see, from here, you could say anyway that this support held. You had a gap that actually held here, so that also tells you that you should be a little bit, just risk averse, take your trades and just be a little bit more careful. So you have the bond market going higher, you have rates going lower, you have the Russell real weak, you have some other names giving back more than they should, you have the banks that are still friggin' heavy. You look at the reversal here in the XLF, this doesn't look as bad as some of the stocks, but this tried to break above this wedge and came right back to it. So usually you don't want to see that happen. You want to see maybe it hold higher or hold this. You don't want to see it trade below the second-day low. So if this is your 3-day move in the banks, it's already below day 2, where the spiders are holding right around this area. So it's showing you some weakness, and we don't like when the banks are weak. And I tried being long Bank of America yesterday. It didn't rally, so I get out of it again. It's just not showing you what it's shown us for a long time, since we've been riding it since $8 or so, or trying to ride it. This was your breakout failure. This was your confirmation below the 8 and 20-day. This is your big gap down below the 200-day, and still not much action here to the upside. So if you're a macro investor in Bank of America and you've been holding it since all the way down here, chances are you just, be a little careful. Let's throw this line. You still have a lot of room to this trend, and that would also give you a big support right there. I don't like being in things when they're below the 200-day, and it's below the 200-day for the first time in a long time. And if you're below the 200-day, chances are you're better off being out of it until it reclaims the 200-day. So hopefully you don't give back too much, because it's been a nice trend, and when trends change, you got to change. And right now, this has been very wishy-washy. So just know what you're looking to do there with Bank of America. As far as other trades and just a high beta, Apple, I've been trying to stay net long since earnings, and it's been working out, buying weakness, not adding on strength. And today, I went home long Apple yesterday. Today I'm not long Apple. I'm trying to be a little extra cute. It still looks good, and it still has support. This was your earnings gap, and here was a nice healthy trade, and then you had your first small RDR that if you got out here, okay, when it crossed back below 585 on this bar, you were able to buy. Actually, no, the high here was what? 595, okay, and then here is the low here, 586, so $9 swing. Same way here, if you got out on this outside day, all of a sudden this was your signal to get back in, and this one closed okay. Unfortunately got me out because I just got a little risk averse, but maybe maybe you get like a 2-day move like this where you have a reversal like this, reversal like that before continuation. So I still think that Apple is one of the ones that you could buy on weakness, and at some point it gets back above this. But it's actually trying to get close to, making a bigger wedge here. So we'll see how much more time it needs. As far as other names in high beta land, Google did pull in today, and I don't think it pulled in too much. And I think at this point tomorrow, if we get a little bit of a down open, maybe we get a little RDR, and we could use this 533 as your level here. That's something that I would look at as far as a tactical buy, holding above this descending channel. Had a nice 3-day move, so a pullback made sense. Again here, same rule, buy, testing, confirmation, sell day 3, and then you don't have to sit in this mess. You actually could buy back. Netflix, I made some money on in the first hour, and this actually held in there during the corrective, the correction move or the corrective move, and holding above this prior breakout. You now have a 2-day pivot. Looks like this might want to see higher prices. Tesla hit that 193 we talked about from the morning call. At this point, you've had your little bit of an oversold bounce from this small RDR here. That was hard to see happen, and now it came up to the gap and didn't fall apart, but I just would be careful. It's still considered a weaker stock. What were other guys looking at today too? What was that? GWPH was Sperling stock. Started off weak and then got a little stronger. Still looks okay on the chart. GMCR, tough stock, but look where it came from this descending channel, holding a little bit of the gap, came off the lows. Still could take time. You don't know how many days it's going to take in order to digest before maybe going again. So just know your risk there. And as far as like other names that we've been trying to trade around, Solar City, it's been hard, right? Tried to push again through this level, and you had to be perfect. You had to sell strength. If you stuck around, you probably didn't make much money there. Zoo was a really good trade because the consensus trade where everyone's wrong. Everyone thought it could be a Twitter on the unlock, and it started lower, and then boom, went positive, and then gave you another really nice trade all the way up to here. That also spread a little bit to some of the others, not 100%. At least you had a tiny bounce in this SPY. Who knows? I know it's been horrendous, but it's been horrendous for those who've been holding it the whole way down, and even as a trader, it's been really hard. But at some point, maybe this could give you a more of a 2 to 3 day trade. So it's something tactical to look at. Got to give it to Jim. Gave us a nice one at the end of the day with this WWE. Talked about the NBC deal, and all of a sudden, you look at the 5-minute chart, and you'll see that it woke up a little bit, and then it actually took off. So if you missed this part of it, I think I got in somewhere around here on this bull flag, and I didn't take it overnight because I don't feel like taking a news play right now in this tape. But nice bull flag. It's coming a lot. If you took it for the deal, from what people are saying, over 200 million is good. Under 200 million is bad. It's come all the way down from 30, and I think a lot of guys had pleasant memories here as RD gave us this one well before here. So with that said, makes sense that it's not really pricing in such good news. So if it's decent news, maybe you get a play tomorrow. So if you wanted some risk, this is the opportunity to take a little risk there. It closed okay. And this is the market we're in, guys. We can't control what the market's going to do. We can only control how we handle it and how we can, we press our buttons with size, with tactics, and how we maneuver. We had a nice 3-day move. Some guys made more, some made less, some were upset. Obviously, after you look at today, there's always some time to readjust and get back involved. And if tomorrow we hold in there, there are some things that held the top third of the range that we could probably go after. So you can create some more trades. And if you're trying to stick with some things, just be careful because there are some signs out there that we see on a macro level that we've had signs with, for the majority of this year that haven't created a huge correction, but the weakness in stocks looks like a correction versus the indices being almost flat to up a little bit on the year. And just I think most people are used to this now. So today was not like, oh my goodness, how could this happen? It was like, okay, here's a lot of the same. We might have to go back to these small RDRs. We might have to go back to the H cell setups, a little bit quicker versus giving things more room. Or the next day or so, we hang in there and they just shook the tree a little bit. Hope you had a good day. Tomorrow's Thursday. We are over the hump for the week. See you at the morning call with Brittany. Have a good night.